So my next question is going to be to Mr. Zafar Masud. You have heard now from two investors who have significant assets in Pakistan. You are the president of the State Bank of Punjab, CEO. My question to you is, what structural reforms are needed within Pakistan's banking sector to shift lending away from government debt, where it is now, toward more productive private sector investment?
Thank you, Amit. After Tahir Saab and the Minister, pretty much everything has been covered. But since you asked me a very specific question, let me just try and answer that more directly to it. But frankly speaking, everything is hidden into what Tahir Saab just talked about, the Minister talked about. It's the banking sector problem is not a fiscal problem. It's actually a fiscal problem manifesting in the banking system. And I have a theory called, leaking pond and leaking fountainhead and pond, whereby the fountainhead is the revenues of the government, is the fiscal account, and the pond is the lending to the private sector. When you have an economy where 59%, and I'm talking about the documented economy right now, I'm not even going down the route of the informal economy. The documented economy, 59% of the economy contributes 15% towards the taxes. Your structure cannot be right. What's happening is what Zafar just mentioned. The result is that the productive sectors who are making money are stretched so much that there is little investment coming through their way. And you are actually encouraging people to go down the route of the informal sector. So this is exactly what the Pakistan banking industry dilemma is. When you have a leaking fountainhead, a fiscal account, then obviously it manifests in two ways. One, the lack of funding availability, and two, lack of documentation. Now, lack of funding perhaps could be taken care of through the open market operation or the or borrowing from the central bank. But the larger problem is in the fact that there is lack of documentation. And we talk about lack of documentation, I would say the informal economy, which is by the state, by the World Bank, is around 45%. I would say it's much larger than that perhaps. But nevertheless, the important thing is with banks' conundrum is that they can only lend against the documentation. They don't deal in good, they deal in documentation. This is the basic principle of banking. And when you do not have the documentation, how do you expect the banks to lend? And this is where the banking, the banking issue comes into play, that you cannot possibly find out what the real waste of anybody's worth is and their ability to give the money back. And hence, because of lack of documentation, you have very limited opportunities available to lend. There are various ways of skinning the cat. One of the ways is to go for digitization. The another way is to go through the route of Hoover, whereby they go for the social collateral. But there is an extent to which that can be done. It has to be institutionalized, and can only be institutionalized if we have financial data exchange type offering to address. And until that is done, it will be a problem for the banks to go for any sort of funding support. On the other hand, the tariffs are making the industry, especially the exporting industries, extremely uncompetitive. When you have so much dependence on the subsidies, there's an extent to which the banks can take the risk on those industries. It is a high risk business. And therefore, the structure needs to be addressed, as Tahir Saab earlier said. It's actually a structural problem which is manifesting in the banking system, to tell you the truth. Whenever, we have been given the opportunity to go through the microfinance institution support or through their technology infrastructure, which in Punjab, for that matter, is very robust, we have been able to do exceptionally well. For example, in the last 2 years, we have been able to double the lending to the SME in terms of number of borrowers as well as in terms of amount. In terms of agriculture also, there was a declining trend of total borrowers, which has now been reversed because of the technology support. Low-cost housing, Dr. Amit Saqib is here. In 200 billion was the mortgage financing done so far outstanding in the banking sector. In the last 18 months alone, Bank of Punjab and Dr. Amit Saqib has been able to deliver 200 billion rupees and it's counting. We are hoping to get 500 billion rupees within the next 2 years. And we are very confident we'll be able to do it, provided the right environment is given to us. But as you know, I have to leave because I have a flight to catch and I can't afford not to catch it. With the permission of the other panelists, and because the other question was linked to it, if they allow me, I just cover that and then I'll take your permission to leave the podium.
Please.
So what's the one we talked about the banking content, the other is related to the taxation piece per se. Really, it's all about broadening the tax base as Tahir Sahib talked about. It's reducing the burden on the productive sectors. There are two darling sectors, and I happen to be associated with both of them. Two darling sectors of the FDR, for FDR. One is banking, the other one is oil and gas, as in EMP to be precise, energy sector. Both of them, in banking sector, the average tax is in the north of 60%. In EMP sector also, one, there is no regulator to begin with, so you can't have even playing field. And on the other hand, you do not, you have 45 to 49% effective taxation. Now these are unsustainable returns for the, and mind you, when you talk about the investor return, the effective taxation is around 73%. It barely left behind, 27% to build the balance sheet of the company. And then rationalization of tariff I talked about earlier. Pakistan is one of the highest import tariffs, and that results into non-comparative export-related businesses, and that's the reason why you're badly stuck with merely textiles and apparels and very narrow food industry, not otherwise. But the real problem is what Tahir Sahib talked about, is in the implementation and the compliance of without exceptions. It's really a matter of political economy than the economic reform per se. If we be able to bring in these three sectors that I talked about, real estate, agriculture and retail into the fold, the effective tax to GDP ratio, although it's a bit normal, but effective GDP ratio will increase from 9% to 14%. And I'm saying it's misnomer because you can still achieve 14% by increasing the tax rate. This is not what I'm talking about. I'm talking about broadening the interest rate. It's all a matter of governance. It's all a matter of administration. And this is what at the end of the day could be addressed with the use of technology and building, incentives for everybody on the way in the supply chain. Unless you have the incentive for everybody to be part of the documentation, you will not be able to correct any situation. It's really a matter of, carrot and stick policy. Add on to what Asim just said. The difference between COVID and now is in COVID it was a demand destruction. This time it's a supply issue. And on the supply issue side, let me just share with you something that Pakistan is not right now dependent that much on the imported gas as it was supposed to be at that time. So So therefore, the pressure on the external account was much more harder because here 50% of the shortfall that has happened because of the supply issue from Qatar has been taken care of through the indigenous gas generation by OGDC and the others, Mari and all, 400 million cubic feet daily. So that's the difference. So let's be hopeful. Just to add on to what Asim said, this time it's very different. Other than the two aspects that he mentioned, the local production is much better and there is much bigger an opportunity to tackle that shortfall than what was there before. On the remittance side too, there's nearly a 3% reduction in the last month. But there is actually a larger hope for Pakistanis. Why? Because the rebuilding that will take place, if you look at Pakistanis working in the Middle East, 60% comes through GCC. GCC, 60% remittances that come through are blue collar workers. The demand for blue collar workers will go up, probably not in UAE, but certainly in Saudi Arabia and the other countries where, some kind of construction effort will take place. And probably, as Asim rightly said, and I completely agree with Asim, without bringing Iran into the main fold, you will not be able to tackle this problem, and Pakistan will turn out to be the biggest beneficiary. Perhaps in the rebuilding of Iran too, Pakistani workers will come. Indeed, the remittances which are blocked right now would come through as well. Lastly, under IMF program, which I don't think is going away anytime soon, what is important is the micro level interventions. And when we talk about micro level interventions, as Asim said, it's the education, health, low cost housing, SME agriculture. This is where we need to demand the leeway from IMF. IMF has no agenda of growth whatsoever. Asim, I'm taking the liberty of treading into your area. But they have no desire, they have no agenda, they only talk about stability. But within that stability, we have the ray of hope that if we get things right on the micro side, I think we have a great story ahead of us. Thank you very much.